What's up, crypto people? It's Crypto Beast here, and today we're starting a brand new series where we're going to be following this crypto guy's journey into the blockchain industry. So, me and him recently actually moved into Barcelona, and you know what? Before I start, why don't you introduce yourself to everybody?
Hey everybody, this is that crypto guy. Recently moved to Barcelona with Crypto Beast. I haven't always been interested in crypto and blockchain, but never having really found the time to properly get involved. Now I've got that time and really excited to bring this new video series to you all, sharing some of my experiences coming into the industry.
Yeah, I think this is a really good time to sort of start these series. I know a lot of new people are joining also, and just to see somebody and his experience and his sort of downfalls and his successes will, I think, really help all of you. So let's get straight into his basically first couple of weeks into the industry and his understanding. So yeah, the first thing we did is we discussed how it all began, who created the blockchain, and I asked this crypto guy to delve into the industry. And the first few weeks, this is what you spent doing, and I think this is the most important part, and a lot of people miss that. So tell us a little bit about that sort of beginning stage.
Well, like the initial introduction really was you explaining, your understanding of it to me, which was better because especially as a beginner, reading what somebody has already written on the internet that understands it fully, it can be quite confusing. So it was good that you explained it initially to me. That really helped me to understand on a human level how it operates.
I think like a lot of people, what they do is they jump into trading, they jump into investing before understanding how things work, and this is why people get scammed all the time. And it's really important to have somebody that, well, you can trust, which is really difficult to find in this industry, but
Definitely.
somebody who can teach you the basics, and let's say when you're making a mistake, correct you. And I think that's what we focused on in the beginning. So what for the audience, what is it that really helped you? Because I remember it took you around 2 weeks or so for you to start, let's say, showing me projects, saying, oh, what about this project? This was good. What is it that you did initially?
Because you gave me a basic explanation. As I started to surf blockchain spaces and Telegram groups and different projects to understand more about it, I would send them to you and maybe ask you questions about them, and you wouldn't just give me an answer. You'd ask me why. Why do you think this, or why do you think that? So then that made me start questioning how things function rather than just taking orders, yes or no, this is a good investment or it isn't.
Exactly.
You gave me, you made me really question why. What makes it a good investment or what makes it a good project, and
I think like
that's
as
the best way,
you as, let's say, who's watching this is the questions you should be asking yourself, because I see so many people getting into the industry and saying, what should my next investment be? And this is not the way you should be
looking
doing
for pointers left, right and centre. Tell me where to invest. Make your own mind up.
This is the whole point. Do your own research. And people say it, and if people say it so much, it's lost its sort of touch, but you should do your own research. And I think that's what, you doing that for the first 2 weeks really helped you
definitely
get into it properly.
Definitely.
Initially, what we started doing is we got into trading, and I think the reason we did this is because I personally did a little bit of trading in the past, but I didn't really get into it, and I really wanted to, I wanted to make money off futures trading. Really,
like anyone, right?
So I think a lot of people want to get into crypto for the trading. Obviously the investing is a big part of it, but in this video we're going to discuss the trading journey that we went through, and in the following videos we will focus on the investment side also. So let's get into the trading part. I think the most important thing the most important thing that you should learn is how to utilize technical analysis tools in the correct way, and most importantly, I think, is to utilize enough of them. I think you had that issue in the beginning,
I mean, before I made any trades, we went into technical analysis indicators and making sure that you have enough of them to confirm a trade. And maybe some traders would do it on less, but we said 5 is a good number. 5, you can get 5 technical analysis indicators confirmed, then that is making a good trade. Otherwise, you're basing it on emotion, which is something that you should never do.
Yeah, it's funny because a lot of people will tell you don't base your trading of emotion, and I think this is what you did initially. I remember you started using 2. So, for example, the candlestick method and the Bollinger Band. you said, okay, I'm ready to make a trade, and you made a couple trades, and
Yeah.
how did they go?
I think the first couple turned out, I made, you set a goal of maybe 5% profit.
Beginner's luck, yeah.
Yeah, beginner's
Yeah.
luck, and we hit that 5%, or I kind of broke it, and you get that little rush, like, oh yeah, I made a good trade, and then that was like the start of the downfall, because then I stopped paying enough attention to all the indicators as we first discussed, because I started trading based off my emotions. So FOMO and eagerness got the better of me in the end, and I paid for it.
Yeah,
literally.
true. So I think a lot of traders make this. Everyone's eager to make money, and most of the time you're going to be successful in the first couple of trades. Beginner's luck, as we said. But it's making sure that you're technically making the trade. So in the end of this video, we're going to discuss the 5 technical analysis tools that we learned. So maybe some of you can use them. So let's get straight into that. So the technical analysis tools are actually based off the Forex market.
But they're not very good for crypto because the volatility is highly different compared to the stock
market. So it just doesn't this is the beauty of cryptocurrency trading, is that the tools that we utilized are not based on this market. So there's so much room for improvement for everybody.
Still a big gap there.
And I'm almost sure that we can create our own tools that work better with cryptocurrencies. So obviously we're not at that level, but I'm sure hopefully one day we will be, or somebody else will be.
We'll get there, hopefully.
So look, as we said, we're going to discuss 5 technical analysis tools, and the first one we want to discuss is the candlestick, and this is the bottom line.
The most basic, this is where you begin.
And it works amazing as well. Obviously, there's a lot of different ways you can look at it, but we're going to discuss 3 main ones, and this is the ones I think everybody should learn. So first of all is the bearish engulfing candlestick. So what's your sort of take on that?
Bearish engulfing, engulfing, the word itself just means that taking over. So I guess what you're looking at is a much larger candlestick overall than the previous.
So it's completely overtaken.
It's completely overtaken. So it could be suggesting a big shift in the market.
Yeah. So everything with trading is all about the shift. It's all about the bounce, basically.
Reversal.
The reversal. That's a good word. So as you can see here is the bullish and the bearish one. So the bullish one is obviously the green one. That means the market is going up and it's completely engulfed the red candlestick before, and vice versa on the bearish. So that's a really good sign of a reversal in the market. So it's a bounce. So if it's been bearish, it's been going down, and you see the green one completely engulfing it, that means the market is going back up, and vice versa. Exactly. Yeah. And I think that those are the first 2, and the third one is the hammer pin. So this actually works really well. So the wixes are the little lines at the top and the bottom of the candlesticks, and they are really good indicators for your trades also. So as you can see here on the red one next to the hammer pin, pin hammer, the wicks. So when it's completely the wicks at the top and it's red, that means it's going to go down.
It's heavily being pushed down.
It's being pushed down, exactly. So the bears are winning there, and vice versa. You can see on the green one, the bulls have pushed the market so much that the wicks is bigger than
everyone selling. They're fighting through and pushing back up.
Exactly. So those are the reversals.
Strong reversal signs. Yeah.
Exactly. So this is what we used, and this actually really helps with the trading. So let's get to the second analysis tool. So the second one is one of my favorites, and it's the support and the resistance lines.
And what I found with this is that it's always best to zoom quite far out on your chart, go to a much longer time frame, look for the last low point and simply draw a long line all the way up to the current time frame. And for the resistance, you want to do the same, find the last highest point and draw a line straight to the most current time frame.
Yeah, and that's it. And the best way to see it is that your support is the floor and your resistance is the ceiling. And the way it basically works is that if that line is broken, you look in the direction it's broken. So if it's going up and it's broken, the line it means there's a bullish market.
If the resistance is broken, that's it.
If it's not broken, that means there's a reversal in the market and there's a bearish market, and obviously vice versa. So that's how you use that technical analysis tool. So I think the next one, it was the Bollinger Bands.
Bollinger Bands.
That's right, yeah.
Yes, Bollinger Bands are based on the price volatility, and you can see the candles fit inside there. And the Bollinger Bands around it will actually expand and contract based on the fluctuations in price.
Yeah, so the way you have to look at it is they're basically price channels. And the way people utilize this tool is that, as you can see here, whenever the candlesticks actually exit those price channels, they must always go back inside. So this is a really good time to actually enter the trade. So as you can see for this example, in the first one, the bullish candle exited the Bollinger Bands.
Yeah, it broke through.
Broke through,
Yeah.
that's right, yeah. And then it must go down. So there is always the bearish candle. And that happens here and here.
See again, yeah.
And over, yeah. So the one before the last is going to be the triangle formation. And I think this is the one that me and you enjoy the most, because you can literally put this in anywhere, in any 1 minute chart, 10-minute chart.
Draw all over the place.
Yeah, 1 year chart is so easy to draw.
Yeah.
And it usually always works.
Triangle shape like this, and once the candles sort of consolidate and break up or down, you can see it all the time. Draw a triangle somewhere, it'll fit in, and you'll see a breakout through there, whether it's on a short time frame or a longer time frame. It just works.
So as you can see on our example, it's not the best one, but as soon as the triangle is actually broken, you know that's the direction the market is most likely to head.
Point of consolidation. After there, you'll see the breakout.
That's right. I think one of the biggest lessons that you learn is that you need, even though you might have, let's say, 4 confirmations and you got the triangle confirmation, I think it's really good to wait for the second candlestick confirmation. So once it breaks through,
after the point of consolidation, so you've got that confirmation in which direction it's going. Otherwise, it can still be a guess. It can still be up or down.
Exactly, because it could break the triangle, it could break one of the technical analysis tools, but you need that double confirmation to feel really confident in that trade. That's right. So for the final indicator, we were struggling a little bit in regards to finding the best moving average, because there's quite a few. So if you go to Binance Futures or any exchange, we were using Binance Futures, you'll see that there's quite a few of them, and the ones we chose, and this is the ones I think most people use, is the EMA and the MACD. And I've thought about the best ways of explaining it, but I think if you're looking to enter a trade, what you need to do is look when the moving average lines cross over or under each other, because this means there's a change or reversal in the market, basically. So there's not really much info to give on these.
Well, like we said before, you can sit here looking at all these technical analysis tools that were created for Forex.
Exactly.
And they might be as much of an indicator, but it wasn't created for this platform. And this is why we really want to lean towards creating a new way of analyzing the market, so that we can find a successful route. Because Forex has been mastered, but nobody's mastered crypto trading yet. And we need to start thinking about a new direction to move in to be able to do that.
Exactly, yeah. Like the MACD, for example, it was made by Gerald Apple in the 1970s.
Yeah.
Which is when, the stock market was a big, well, it's a big thing now. But
and that was to indicate the buying and selling the market, but how can it be applied to crypto? Because the rules are completely different.
Exactly, the volatility is different, the market is different. So it's very difficult to actually become a very successful trader in the cryptocurrency market using all these techniques. And this is why I think in your journey we started with trading, but we're not really, like you said, you're not really interested in it.
Like we say, if we feel like in the future maybe there's more of a way to get a foot in the door, understand the market better, and have it be sustainable, then yes, it's something that I'm definitely interested in. But for now, playing around with that, we looked into investing in ICOs and new projects, and found that that's definitely the path that's worth going down, especially currently in the crypto blockchain.
Well, industry. Not ICOs. That's the wrong word, but investing into new startups, and this is what I think these video series are going to be about. So in this first episode, this was the first 2 weeks. We did some trading. We'll show you some of the results at the end of this video. But what we've actually started doing is investing in projects, and in the following videos what we're going to be doing is showing you how we found these projects early on, the projects we invested in, the amount of money we made, and hopefully all of you can understand how to find these projects and hopefully make some good investments in the future. So that's it for today. Look, make sure you subscribe so you're up to date for the next videos, and we'll see you on the next one.
Signing out. Peace.
Bye-bye.
But I don't think they're very good because...
Got you.
We'll go right.
This is what everybody uses, but I think
What are you thinking, bro?